Hi everyone, welcome back to today's morning report with Richard Perry, market analyst at Handtech Markets for Friday the 11th of July. I'm going to look at dollar yen now, and I've been talking in the last couple of weeks really about this big closing level at 101.30. You look at this chart over the past 6 months or so. There's only been one closing level, and that was on the 3rd of February. There's only been one time that the dollar yen has closed below 101.30. You look at all these attempts. I mean, you've seen intraday dips below on numerous occasions. That's fine, but you've never really seen a close below. You had a close at 101.30 on 30th of June. Yesterday we closed at 101.31. So we've still not yet seen a breakdown, I think, on this dollar yen chart, and I believe that this closing level of 101.30 on dollar yen is sort of now, in my opinion, going to be an assessment of risk in the market. If the market sees that this Portuguese situation is getting worse and possibly going to be a contagion issue, I think we're going to see a close below 101.30, and that would suggest that I think the market is moving into safe haven assets, and certainly the yen is one of the big beneficiaries of that outlook. But at the moment, we're still seeing this 101.30 level held onto, and yesterday it had a dip below that. 101.04 was the low, but it closed at 101.31, and now again today it's had a slight dip below, but again it's still holding on at the moment to that 101.30 level. And I just think that the market is not yet convinced that this is a breakdown of risk appetite in terms of a flight to safety, and at the moment it's just still assessing what is going on. Now, at the moment, I still believe that there is a slight bearish tilt to this dollar yen chart. That's absolutely fine. I mean, you've got these moving averages that are now all falling in bearish sequence. So in that scenario, you would certainly say the pressure is to the downside. Also, you've got the RSI, which continues to fall back towards that 40 level rather than moving towards 60, and it sort of finds resistance above just above 50. So that would suggest that there is again a very slight bearish tilt to dollar yen. Again, that's fine, but I'm not saying that we're going to be breaking down yet, because I think the market is still reassessing the risk on this. In terms of intraday levels, you'd be saying that we've recovered, and there's a minor support at 101.20, which was the low from the end of end of June, and also early morning today. 101.20 seems to be finding a support. 101.04 was the low from yesterday, so that's fine. And in terms of rally upside, there is a basis of resistance around 101.40. Which was an old support on a few times and seems to be capping early morning today. So it's sort of like about a 20 pip range of trading that we've seen today, which is not a very wide day certainly. But if it breaks above 101.40, then maybe it could push back towards this 101.80 level, which again has been a basis of resistance. So it's just, at the moment, as I said, the market is just trying to get to grips with exactly what's going on, and I think at the moment there's no indication yet, and I use that word yet. There's no indication yet of a breakdown in risk appetite, but it is being tested. Anyway, so I wish you good luck in your trading on dollar yen today. If this risk appetite does hold, I think ultimately dollar yen will start to push higher again back towards this 101.20 mark, but at the moment it is just being tested. Anyway, so I wish you good luck in your trading today, and I will speak to you later. Thank you.